What up, guys? We're going to be taking a look at the market today and just reviewing price action. So, let's get right into it. Sorry for low energy, but I'm not feeling it right now. But this 920 940 macro was actually pretty cool, and even though I was offside, ironically it was still beautiful to the downside, because you can see this was high resistance, and had we used what up, Snowman, and ironically, even though I took a trade that was opposed to this, trying to take this as low resistance, ironically, had I identified this as high resistance, we could have got an amazing move to the downside, perfectly within the macro. And that's why it's so important to really identify whether liquidity is going to be high resistance or low resistance. And obviously this later on became low resistance, but when we wanted to take our trade right at market open, it was high resistance. And so one thing I want to figure out is, like, logically, like, what was the reasoning for why we didn't run the low resistance liquidity at market open? Because you can see market open, it had the opportunity to. It really did. We could have easily continued to expand to go run that low resistance liquidity during market open, which is the trade that I was anticipating. Basically retest it here and then boom. But you can see we actually continued lower. So this is the first screenshot I'm going to take, is we actually had high resistance liquidity. Hey, good morning, bro. It ain't morning for me, but morning. But Shaney, maybe you can offer some perspective on this. The market open, I was anticipating market open to go run through this trendline liquidity. At the time, I thought it was going to be low resistance, but it ended up being high resistance. What up? We got everyone here now. What up, Kirk? And Kirk, you're third, bro. You're third. You ain't first. I thought, this could be low resistance, and clearly it wasn't ready to be low resistance. So our job today, one of the big jobs in our back testing today, is we got to figure out how could we have identified that this wasn't going to be low resistance yet. And then when we can identify that for the future, we're going to understand on what days, why market open, what days market open is going to reject high resistance liquidity, and then 10 a.m. is going to expand. And that's going to be helpful for the future. So that's the first note I'm going to make, is market stayed high resistance upon market open, right? 920 macro to 940 macro. 940 macro delivered us lower. So our job, and maybe you guys can help me here, our job is to figure out logically why didn't we expand at market open. Clearly we didn't really break this high. There was no break of structure, you could say, but there's probably other confluences to this as well. So let's do some digging and figure out possibly what could have been the case for this. Then you can see we went to go run this later on. But super valuable data backtest. So let's go ahead and save this here. What day was today? October 14th, Tuesday. Market stayed high resistance upon market open. 10 a.m. ran the LLR. So this is something we can use for the future, right? In this specific situation, like maybe there's another situation that happens where we need to anticipate market open to be the Judas swing, not run the low resistance liquidity, and then 10 a.m. to reverse and then go run that low resistance liquidity. You get what I'm saying? Right? This could be a very valuable note for the future. Like, Let's make a note of this. Liquidity curve. Because it could, at the time, we didn't know if this was going to be low resistance or high resistance. It ended up being high resistance and then low resistance. So, something to make note of: market open may keep the liquidity high resistance and then create the Judas swing for 10 a.m. to later go run that original liquidity. Keep in mind for the future, right? That this might occur in the market again, and we're gonna basically ingrain this in our head, like, yo, market open might not actually go run that liquidity curve yet. We might need to create the Judas swing and then 10 a.m. reverses. And so when you look at it like that, right, when you look at it like that, this was actually a very clean day. 920, 940 macro created the Judas swing. 950 to 1010 macro ran the low resistance liquidity. And yeah, the market really did its job exactly as it was intending. So market open kept the liquidity curve for 10 a.m. to run it. Okay, so let's figure out possibly what was the logical reasoning for why this liquidity curve stayed high resistant. And one thing I kind of realized is, I'm not exactly sure if this was the case, but I think we pretty much filled this new week opening gap, actually. Oh, psych. Just kidding. The new week opening gap open is all the way down there. So yeah, definitely not. Yeah, we definitely did not fill this. The drawn liquidity was the new week opening gap. True, but we'd already tapped into it right here. So, for instance, new week opening gap was already tapped into. So when we came back down into the new week opening gap again, we'd already drawed into the new week opening gap. So why did we need to draw into it again, right? It's just a thought. I don't know the answers. I just a curious learner, and let the market be my teacher. But yeah, clearly this was a void. And then, we talked about this from before. We have this old daily gap that's been being respected for a while now. We have swept out the lows. Now we're respecting this again. It didn't close the gap either, is the thing. That's what I was just getting at. Is here, let me show you. So the gap is from here. This is the close, and then this is the open. So it looks like the gap is from here to here. Yeah, but this isn't actually the gap. The gap is from close to open. So the new week opening gap is actually this big. It looks like it's right there, but it's actually not. But I get what you're saying. If you look at it from open of the candle, the last candle to the close, then yes, that might be one way you need to look at it. I'm not. Once again, I'm just a learner from the market. This could actually be a valid way to look at the new week opening gap. Maybe you shouldn't use that. I don't know. I'm just a learner. I'm just an observer and a learner of the market. As well, we have this original 4-hour gap from all the way over here, and you can see we've been respecting this quite a few times now. So 4-hour for VIA gap, and this gap has been respected. We'll also make a note of that, Snowman. I think that's a very valuable insight. that even though technically we didn't go fill the entire gap because the true gap is from the close to the open, technically we filled the visual gap. So let's mark this out, right? How we use this 4 hour for value gap. We reclaim it once, twice, 3 times. So if you think about it, this is kind of supercharged for value gap, right? Meaning we reclaim it 3 times. 1, 2, 3. So I could definitely see us expanding out of this 4 hour gap to the upside. Here, let's actually mark this out. 1 use, 2 uses, and then 3 uses. So whenever we use a gap 3 times, I like to call it supercharged, and they frame very high probability market maker models out of them when a gap gets used over and over again like this. So let's go ahead and put that lightning bolt there to mark out that this is a possible supercharged gap. Because the last bar was already mitigated, right? So I'll show you. Here, I'll show you in just a second. Okay, so what I was saying is the reason we didn't fill the gap is because it looks like this is the gap from the open to the open. But in reality, the gap, if you think about it, it's actually from the close. If you think about how like the true new week opening gap is from the close of the last candle. So this right here to this open. So from this close to this open. So it looks like this is the gap, but this is the whole gap. So technically, right, we did not, even though it looks like we filled the gap, this is not the close. This is the close. You get what I'm saying? So then again, though, if you conceptualize it, I mean, this is kind of where the imbalance in price was. So it kind of makes sense, right? What you're saying makes a lot of sense. I mean, this is where the imbalance was, and we ended up filling that. So I think that was a valuable insight. We ended up using that 4 hour gap. So man, it's crazy. The market really is perfect. It just does exactly what it needs to do. So yeah, let's make a note of this, right? The visual gap from here. I'd actually mark the visual gap from here to here. Right? The way this looks like it was this gap from a visual point of view is filled. So that was definitely very logical for that to come fill that. So I guess let's take a look at how we could have caught a move at 10 a.m. Let's say we had waited till 10 a.m. We probably could have caught something really nice. I mean, you guys might have waited till 10 a.m. if you did get job. Okay, so yeah, how could we take a trade off of this idea? And it definitely sucks because we did have S&T. I thought that maybe that S&T was enough, but it wasn't. We need to come. So you could definitely make the argument that yeah, you could definitely make that argument. Why is trading so hard, dude? I'm just kidding. It's fine. Okay, so at this point, 10 a.m. is the reversal. Note, let's see, 9:45. Note the 9:45 candle. What's significant about the 9:45 candle? And actually, Shani was telling me this. This is a new concept from the 2025 ICT mentorship, but I actually think it's very fascinating. You basically put a gradient on the old, most recent 4-hour candle, or maybe, I don't even know if it's the most recent or what, but you put a gradient on a candle. You split it into fourths, and apparently, I don't know if that was right. Maybe I didn't do this right. Clearly I didn't. Clearly I messed this up. Hang on. Oh, let's put a gradient on this candle. Okay, I think this is the candle we put a gradient on. And now we go down. No. I'm trying to figure out what Shani did. Oh, it must have been... Oh, it was this one. Wow, look. So the gradient of this candle... Yeah, we hit consequent encroachment. That's what Shani was talking about. So consequent encroachment of the 4-hour candle was hit. Which is kind of cool. And then 9:45 was the low. What's significant about 9:45? 9:45 is a 369 time, right? You can see we get a momentum candle out of it. It's not, I mean, anytime you see a momentum candle off a key level at a 369 time, it's significant. For my back testing, at least. Oh my gosh. So obviously we still had these low resistance highs, and we had the macro at 950 to 1010. So with all that in mind, we're kind of like, okay, we're kind of anticipating at this point, like, yo, macro could reverse price, right? So this is kind of our train of thought, is that the macro could reverse price to go run the low resistance liquidity. And we actually kept going to go run the low. We kept going until we hit this low resistance liquidity. So honestly, I'd kind of mark this macro out like this, because once again, personally, I see macros from the entry to the draw on liquidity within the macro. So 950 to 1010. And then, yeah, obviously this was all low resistance liquidity. So how can we get in on this move here? Well, we break this high. No retracement to a fair value gap. Now, there was an inversion. And I think Dodgy was saying that this was what he would have taken. I like it. I like this inversion a lot. So note this inversion for value gap at 952. The way we come back down, create an OB, like as Dodgy likes to call it, and then we inverse the gap. This signature, very strong. Dodgy likes to talk about this all the time. We'll create an OB and form an inversion for value gap. And these inversion for value gaps are super nice. And it was going into the macro, which is why it's nice. I took that on stream, but who cares if Dodgy might have. Let's go. You took this on stream? That's so nice, dude. Yeah, man, I probably should have waited for something like that. We move on. It's okay. I'm just trying my best. And the nice thing about this, guys, the reason this is a nice confluence here, is because here, let's actually mark out all of these low resistance highs. And obviously this is the golden target right here, right? This, when you see low resistance highs like this and then an inversion like this, I mean, this is going to make you so much money. If you can just catch one of these up to low resistance highs, you are going to make so much money. And I've yet to really catch a good one because I'm still, yeah, you don't need the Dodgy indicator. Exactly. But yeah, all this is void down. All this is LRLR. And then inversion back up, running the low resistance liquidity. Whew. Clean trade, guys. That's a crazy RR trade. Like I always say, just one really good trade like this makes up for so many losses. It's crazy. Let's mark out the additional confluences though. The additional confluences were that we basically had filled what looked like the visual gap, right? We filled the visual new week opening gap. I don't know if we consider that confluence or what, but yeah, you definitely need this private mentor. No, exactly. Anyone can take an inversion for value gap. It's just a matter of honestly patience. It's honestly patience, and unfortunately, that is the hardest part of trading is patience. Okay, I don't know. I guess there maybe wasn't another confluence. Well, sometimes it's just okay. Like sometimes it's okay. My trading style is definitely to hold for the liquidity because it's just I can just tell. Like I don't even need to know. I don't even like from a drawn liquidity. I'm bad at entries, but I'm really good at knowing like where is the market going to finish the liquidity run? Where is it going to finish? It's obviously going to peak out right here. If it goes higher, then fine. But I know that this is going to be a take profit, and you can see it was right. I'm pretty good at recognizing that, but the entry, that's the hard part, right? And you can see that's exactly where the low resistance liquidity run kind of ended up peaking out here. Anyway, this was really nice. In this specific situation, I honestly don't mind putting stop loss below the candle. I know it's kind of aggressive, but I just feel like you could do it. I feel like you could get away with it, honestly. And then yeah, the OB gets created, the inversion happens, and bang, dude. Beautiful signature and price here. And you can go break even. Probably go break. You might not want to go break even right at that high, but maybe like here and then bang. And then you don't even come. The market does not come back to your entry at all. Now, would you get in at that exact spot? That's the hard part. That is the hard part. Yeah, that was probably the trade of the day. We'll probably post this as trade of the day. Okay, so this was a inversion at 952. Just for fun, what's 9 plus 5 plus 2? 7, 16. Okay, not a 369 time, but still. Okay. 952. Inversion for value gap on the 1 minute. And we create an OB. Okay, I'm going to go ahead and save that. So, yeah, that was not bad. I kind of want to take a look at true opens, right? We were below 730 here. So, once again, true opens, an incredible confluence. Oh my gosh, and could you imagine? We had the RTH gap above. So could you imagine having held to that RTH gap? I bet you we filled it pretty good, actually. Yeah, we did, dude. Of course we did. Of course we filled it. Of course we did. I'm not surprised at all. Not surprised one bit. Not surprised at all. Wow. The way we fill this RTH gap is just beautiful. And my main issue is being on the chart exactly when the best entry is gonna happen. I swear, like, not I swear. That's just the hard part about trading is like you can know what the good entry looks like, but are you gonna be on the chart exactly when the good entry happens? And man. Because, like, obviously, I think most of us could take this trade. I think all of us could figure out, okay, we're probably going to fill the RTH gap after we get this inversion. But does that mean we're going to be able to take it if we're not on the charts? Like, you know what I'm saying? And also, it's just such a high RR trade, you know? But with conviction, you could take it. But it's just crazy how, like, these RTH gaps are going to be such a nice draw on liquidity. We really got to wait for 10 a.m. Unless it's really obvious market open's going to run liquidity, then okay. You know what I'm saying? But in this case, it was not obvious market open was going to run liquidity. So I should not have taken a trade. So here's another version of the same trade. Very aggressive version where we basically just say YOLO, we pull a Shaney. We say, okay, let's see if we fill the RTH gap, which honestly was pretty reasonable to assume that could happen, and it did. So 952 inversion for value gap on the 1 minute. Just another way you could take this trade. Impressive, Snowman. Very, very impressive. Yeah, you know, it's gonna come with time. Like, you'll gain conviction that over time like 10 a.m. 950 to 10, that first macro is going to reverse in price and then expand. And so you can take an entry within that macro and then hold it for the rest of the day. A lot of the time. That's something that's just going to come from screen time. So, but I will, honestly, I'm not saying that I would have been able to either. I probably would have chickened out as well. That's difficult. I'm not saying it's easy. On the 32nd, or maybe the 15-second, you could make the argument that maybe we had a 15-second 2022 model. Yeah, you can make this argument here, like, yo, technically, like, on the 15-second, we break this high. Yeah, I actually don't mind this on the 15-second. Not something you might not see this. I probably wouldn't see this. Very subtle, but we break this high, and then it's just like showing signs that, like, yeah, we could reverse here. And then bop. Such a subtle thing, but once again, these are the trades that if you can notice this kind of thing, this will make you a millionaire. If you can notice this, like, very subtle break of structure here and then 15-second gap and retest of equilibrium. Oh my gosh. Wow. That actually is really, really beautiful. Hello. Wow. These are the type of trades where, like, sometimes, guys, with 2022, sometimes might be worth trying with 1 micro at a microscopic stop loss at equilibrium, because just saying, right? Just saying, you know how much the time we perfectly react off of equilibrium in these types of... Oh, never mind. I was wrong. We did not hit equilibrium. But if you measure it out from the green candles, we do. Either way. Nice little 15-second 2022 model. So I guess let's record this. Now I'm not sure if we swapped out external liquidity, but we got a nice little internal little bop here. Bop. This is not obvious. I'm not saying that it is, but I just like to take notes. I am new. Can you tell me how to trade futures from basic? There's no simple way for me to explain it in a matter of like a couple minutes. Okay. You know what? No, I accept the challenge. Okay, I'll tell you how to trade in a simple explanation. So, as I always say to like everyone who watches me, the market moves in 3 phases. The market's going to range. There's going to be stop losses on either side. And then this is gonna take a while. I'm not gonna lie. Kedar, I want to explain it, but it's like it's gonna take me a while just to like explain everything. Okay, I'll just do a very simple explanation. Right, the market moves to manipulate and expand. All you're doing is you're trying to identify the manipulation and then take an entry to get on side with the expansion. That's it. So it could be a change in state of delivery, could be an inversion for value gap, could be a 2022 model. But basically, the market's going to move in these 3 phases. Your job is to identify them and then trade alongside of it. A Forex trader, I am trading gold, but I want to trade future. So lot size. So NQ futures, the mini version, like the bigger one, moves $20 per point, which is for every dollar it moves. It moves for every the 1 digit place. So every point it moves $20. The micro contract, for every 1 point or like a dollar it moves, micro contracts move $2. So yeah, I don't know if that helped or not, but if that's what you're asking, but anyway. Yeah, this ended up playing out nicely. Now, am I saying we would catch this? Probably not, but man, could you imagine taking a trade like this on stream? It'd be so crazy, bro. Alright. I'm not saying that's realistic. It's not. But I like to mark it out because maybe one day. Oh, let's delete this. Oh yeah, we're going to look at true opens. So true opens will be helpful to identify this move lower because we definitely manipulated 730. $9.47 2022 model on the 15-second, and that's at $9.47. Okay, so yeah, not necessarily a realistic trade, but it is kind of cool that the market does move so precisely. Let's take a look at 9:30 so we had We had 730. I'm going too long from the FEG and TG, same as you. You put it, so let's say you want to risk 1% on a 50K. You get the long and short tool out, and you put in how much you want to risk. So 1% of 50K, math, brain, 500, right? think that's right. Yeah, 500. So you put in 500 as risk, and then you draw this out, and it's going to tell you how many contracts to risk right here. Right now it's showing mini contracts, but you'd want to put this on the micro version, and it's going to tell you how many micros to buy. Or you could just multiply this number by 10, and it'll tell you how many micros to buy. So that's what you do. Okay. Okay, yeah, 730. So we're going to look at 730. Yeah, in hindsight, guys, if we look at the Judas swing here, right? This was obviously the Judas swing. The cool thing about the Judas swing is it perfectly fit in with true opens. It's just, oh my gosh, it just makes you kind of just like obviously you're sad, like I'm sad I'm wrong and stuff, but like I'm also aware that it's a skill issue. At least I'm aware. Like some people they blame the market and give up. And it's like, no, dude. No. Skill issue, right? We have 922. So we have both the true opens. And so you kind of see how like we manipulate all these true opens, form one final purge up into this. At this point, this was high resistant liquidity. We kind of already talked about this, but yeah, we purge 730, we purge 922, and then actually we purge the 22-minute one as well. That's 928, and using all these as a confluence, you can get very, very precise, souping this high at 930 into the high resistant liquidity. Oh my gosh, could you imagine that? Just taking that as a soup into the high resistant liquidity. I know that's not even a model, but like you could probably do that with pretty high conviction with all these true opens, the way they line up. Wait, that's an interesting idea. Are you guys seeing this, right? You see how we have all the true opens here? And right before market open, we push up into this old high, into the high resistance liquidity. You see what I'm saying? Like we push up into it, into the high resistance liquidity. Let's say you were anticipating the Judas swing. If you're anticipating the Judas swing, you could maybe actually just say, okay, this is a high resistance liquidity curve. If we're going to get the Judas swing, this high resistance liquidity is going to hold. We could actually just soup into the high resistance liquidity. Right? Most people, they're not even going to think about that. But look, every single true open, all the lines here, and then high resistance liquidity tapped. When we get the Judas swing at market open, inducing this high. It's a pretty interesting little thought, but you can't argue with what happened, right? This is exactly what happened. High resistance liquidity curve, inducement above all the true opens. This isn't even a model. I'm not even saying this is a model because it's not. This is just gambling. It's not even gambling though, because it's using smart money concepts. Like you could take this with a tight stop loss. It's obviously not gambling. I'm trying to think. I can't frame this as a model. Like it's just souping into the high resistance liquidity above the true opens. I don't know what to call it. But like I'd consider this would be something maybe I would take on like my just for fun account, right? With a super tight stop loss. Because if this hits, this ends up being like 10-1. You made an indicator on NinjaTrader that gives me a bias depending on true opens that helps me take this trade today. Dang. That's pretty sweet. But maybe you could have framed some kind of flow state here, and then this entry could have been aligned with the flow state. I'm not sure, but clearly we induce everything into the high resistance liquidity. Actually, yeah, there was probably some kind of flow state here. Right, you kind of get what I'm saying here. Thank you for help. Yeah, hopefully I helped you. I'm trying to help in whatever I can, whatever way I can, man. Anytime you need help, just let me know. I'm always here. Come to my streams anytime. Yeah, so you can see how clean this ended up being, right? So I don't even know what you would call, what kind of model this would be, but basically you just soup into high resistance liquidity. That's what this is. I don't know what model this would be. But we soup above all the true opens in anticipation of market open to be the Judas swing. What a cool trade. What a cool. Hey, you took it? Let's go. What a cool idea for a trade. Not saying I would probably think of this in the moment, right? Probably wouldn't, but it's just a interesting little thought. And oh, as well, right? We could also show how this was a SMT, right? We ended up getting SMT with this. Oh, yeah. So you can see we ended up getting SMT with this high. So yeah, there were definitely confluences for this idea. And then let's just say you took this projection after the soup. Yeah, that would be crazy. That would be so clean. I'm not saying we could necessarily think of this, but Vol model. Hey, we needed a name. Yeah, man. I mean, we should make this into a model because it's honestly kind of valid. It's just souping into high resistance liquidity above true opens. That's clean. I like it. Let's call it the Vol model, bro. I like it. Kirk, this is the Vol model. Oh, because you know what? Because the Vol, right? What does Vol do? What does a Vol do? Vol, doesn't it dig? This is digging into the high resistance liquidity, right? It's digging a little hole into the high resistance liquidity. Wait. What does a Vol do? Now we talking about making mod. Of course, Gary shows up right when we're talking about making a model. No, this is actually kind of cool. Yeah, Vols absolutely dig. They're little burrowing rodents. So, Gary, what we're talking about is basically we were above a true session open, the true 90-minute open, the true 22-minute open. We had a high resistant curve here. In anticipation of this being a manipulation leg lower, this is a very high probability turtle soup in line with the high resistant liquidity curve. So we're talking about naming this the Vol model, where we basically just soup in the high resistance liquidity above or below true opens. And I kind of like the idea. Kirk, we got it. The Vol model. Gary's gonna kill us, bro. Gary's cheesed. Oh my gosh. Where's the text box? Nope, that's not what I want. A Vol makes volume imbalances to live in. But this isn't even a volume imbalance. This is just a soup. Oh. Okay, let's just do it like this. Souping into high resistance liquidity when above / below true opens. Makes sense? That's the Vol model. Gary's gonna kill us, bro. Hey, we just observe the market and see what happens, and we learn from it. That's, it's powerful stuff. I'm gonna make a new template for Judas swing here. This is kind of funny. What image do I use? Oh my gosh. Why is this so funny to me? I don't know. If you guys don't get why we're calling it Vol model, there was a Vol in the window, in the workout room over there, and I saw it while I was on stream, and I was like, "Yo, there's a little hamster in the window," and then figured out it wasn't a hamster, and it was this little guy. And so now, in honor of him, we got to name a model after him. So yeah, that's the whole reasoning behind this. Vol model. Turtle souping into high resistance liquidity above true opens. Or above or below. I gotta redo that. Okay, so what's next, guys? What is next? What do we look at next? But yeah, you can clearly see this inducement into the high resistance liquidity was nice. Let's see if we had a flow state, because a lot of time these inducements will occur into a flow state change instead of delivery, and so I just want to see. Inducement into high resistance liquidity above true opens. Kind of nice. Okay, so yeah, let's see if this ended up being a flow state model to the downside. Looks like we had yeah, so like we definitely have something going on here. It looks like almost like propulsion block type of action. yeah, once again, guys, propulsion blocks within high resistance liquidity. It's just beautiful. Propulsion blocks. Look at how many propulsion blocks we had within this high resistant liquidity curve. Like boom, boom, propulsion, boom, boom, propulsion, boom, boom, propulsion. It's like crazy. What is your model? My model is the new model I just made, the Vol model. I'm just kidding. My model is just trading to get on-site with distribution within AMD. That's my model. So it could be an inversion for value gap, could be a change state delivery, could be a 2022 for value gap, could be a rejection block, could be basically any entry model to get on-site with distribution and identifying AMD within the market, because that's how these markets move. That's how I trade. And then I use a whole bunch of other confluences as well, like true opens, SMTs, that kind of thing. So let's see here. Let's see. What else are we looking at? Oh yeah, propulsion blocks. So this is actually very precise here. But look at this propulsion block into the true open. Ooh, this is getting clean. Like, this is an obvious propulsion block. Let me show you guys. Let me show you. Let's keep that for now. Kind of makes sense why this occurred the way that it did. Now that we're really digging deep into it, we can clearly see, oh wow, we had this really obvious high resistant liquidity curve, and then we had a order block here on the 1 minute. Now, yes, I know it's the 1 minute, but still. OB. And then PV. Yeah, this was, when you look at it in hindsight, this is really actually really obvious. OB, PB, and then what happened? Bro, you know, Kirk, you know who's back? You know who's back from the dead? You know who's back? The Fly, bro. The Fly is back from the dead. It got reincarnated into a fly again. I don't know what I'm saying. But yeah, the Fly's back. Where's the propulsion block? So yeah, we had a nice 1 minute propulsion block in line with this high resistant liquidity above the true opens, and we can drop down to a 15-second chart, and then we cook here. We cook. Bang! Oh, no way. Javier, you're copying Kirk now. Javier's copying Kirk now. He's like, just saying first just to say it. Because Javier, you're like 7th. Oh my gosh, I love you guys. You guys are the best. Wow. This is just so cool. You guys see what I'm seeing here, right? 1 minute order block, 1 minute propulsion block. We have high resistance liquidity. And then 15-second change in state out of this. These markets, they're bizarrely perfect. I'm telling you guys. Like every day we complain like, oh wow, we missed. Why did this trade not work? Why did this fail? It's a skill issue, guys. It's a skill. At least it's a skill issue on my part. Like, I just suck because clearly these markets are like extremely, extremely precise, and I just suck because oh my gosh, 15. This is such an obvious 15-second change in state out of this too. This, wow, this cooked, dude. This absolutely cooked. Oh my gosh. Bro. There's so many ways to trade these markets. It's ridiculous. It's actually kind of ridiculous. And then, yeah, 15-second change of state out of the propulsion block. Nice little AMD going on too on the low time frame. Man, imagine you took this live. You know how cool you would be? You know how cool you would be? You'd be a goat. You actually would be a goat. If you took this live, you would be a goat. Oh, just doesn't it make you just get so excited to see trades like this? It's like, wow, if I just took this trade, one of these trades is gonna, this one trade is gonna cover 8 losses. Like, how sick is that? Now, obviously, it's not easy to do, but patience. We are Jedi Knights in the making. We're Padawans. High resistance. Or, I mean, maybe you guys are already masters. I don't know. Shaney's a master. I know that for sure. 1, 2, 3, 4, 5, 6, 7, 8. Boom. That's like instant. Right at market open, that's instant. Boom. 1, 2, 3, 4, 5, 6, 7, 8. Guys, in the future, maybe we just gotta look for a 1-minute propulsion block off of a high resistant liquidity curve right at market open. This might be all we need. This is us basically trading the Judas swing. This is us creating. We create the Judas swing here. How beautiful. The Judas swing created by me. I did this. This is my fault. I created the Judas swing. Yeah, but you can see this is the Dynamis model. Very nice. Very, very nice Dynamis model here. Meaning propulsion block, align time frame change state of delivery with a sweep. Very simple. And then stop loss. I put stop loss right here. And yeah. Wow. That's cool. I cannot wait to take a trade like this one day. Yo, Jake, look into the Mag 7. I know the Mag 7. I like the 7 tech stocks. Like, what do you mean look into them? Are you coming to live in New York? I want to move to Florida, bro. I'm stuck in the not little, but the empty wasteland of Idaho with the potatoes. I'm stuck here, bro. Maybe you could come save me. I want to get out so bad. But yeah, I'm probably going to move to Florida when I have my own money and I don't have to be in this basement anymore. Look into the Mag 7. I know the Mag. Like, what do you mean look into them? Like, I don't understand the sentence. like, as if I haven't heard of them before. Like, as an investment. I'm confused. Yeah, the Mag 7's cool. Mag 7's cool. I mean, yeah. The Mag 7's cool. I don't know. Like, I know the Mag 7, if that's what you're asking. And then boom. TP gets smashed, bro. Wow, what a beautiful. Oh, to trade ES? I've never used it before. I've never never even thought to use Mag 7 to trade ES and NQ. But you might be able to. I think it's just easier to look for divergences on ES, NQ, and YM, though. It's probably easier. But if I'm trading, like let's say I was trading Meta, I might look at Microsoft, Apple, Amazon, and the other one to see if there's a divergence, for instance, because the correlated assets would be the other ones in the Mag 7. Okay, let's save this. So this was Dynamis model 931. Beautiful. One day I'm gonna take a Dynamis model live, and you will all see the power of it. Okay, 931 Dynamis, 1 minute aligned with the 15-second. Clean. Yeah, 931 Dynamis, 1 minute aligned with the 15-second. Meaning it'll show a graph with all 7 stocks, one singular graph. Yo, really? Like, make your own index on TradingView. That's an interesting thought. I should maybe consider doing that, but I don't know. It kind of takes a lot of work. I don't know if it'd be worth it. But maybe. I'm not opposed to it. It sounds very useful. Right now, the indicator I want to make the most badly is I want to make I think it would be fairly simple to make as well, which is why it's a good starter project for a personal indicator to make. Would be just make the true opens, the current true open of any session, the 22-minute one, the 90-minute one, the true session open, and the true day open all show up at once. And I think that would be just like a very nice indicator because I don't want to have to go look for them. I want them to all be automatic. It's super easy, bro. Oh, sorry, Kadar. Are you in prop trading or own funding? I'm trading props. Actually, Top Step. I also have a personal account, and whenever I take a trade, I copy trade it across all props, and I also take it on my personal. And yeah, I'm just trying to work on getting better. But yeah, that's kind of what I'm doing right now. So, but it'll show a graph with all 7 stocks. So will that help with trading Nasdaq or NQ? That's kind of cool. All right, what do we look at next, or do I take a break? Should I take a break, guys? What do you think? Now, obviously, we had the 15-minute inversion for value gap. I think my grandma could spot this. And that's pretty cool, Javier. So I can look for divergences like between NQ and let's say like Meta. Okay, yeah, definitely show me. Like a divergence between NQ and Meta would be a valid SMT. If so, that's kind of cool. Yeah, this was obvious 15-minute inversion here. And the reason this is nice is actually we were delivering out of that 4-hour supercharged gap that I was talking about, right? This 4-hour gap gets used once, twice, 3 times. So we're delivering out of this. And honestly, guys, that's reason enough for this inversion to be super, super high probability. Well, how do how do you look for... Oh, you combine all the Mag 7? Yeah, you should show me because I might be a little confused, but that sounds honestly kind of useful. So like it's the Mag 7 combined into one stock. Yeah, so this is actually really nice. 4-hour. Oh, that's sick. I've never thought to do that. And that's actually helpful for SMTs. It's actually helpful. So yeah, 4-hour supercharged gap, 15-minute inversion. So you can see why this inversion was so nice. We actually deeply swept liquidity into this. It wasn't just like a little tiny sweep. It was like we dug deep into this gap and it was supercharged, meaning we'd already used it we reclaimed it. This was the third time we reclaimed this gap. So let's get that supercharge emoji. And then, yeah, Jan entry out of this. Or you could take this as a regular inversion, whichever. Could you imagine just taking this trade and then profiting and banking? That would honestly make me mad. Like you're telling me I'm working so hard and all you have to do is this 15-minute inversion. But it's true. It's like all you really have to do is take the simple trades. But no, sometimes it's not always easy. Sometimes it's not always easy to spot them, especially right as they happen. And it's right at 10 a.m. too. And then yeah, all this becomes low resistance. That's sweet, Javier. I'm gonna have to... You're gonna have to show me how to pull it up, though. That's the thing. So yeah, with this inversion, with this much momentum, I'd go stop loss like that because the whole point is that we're not gonna slow down here. So, like honestly, like stop loss like that. And then you can see that we run the LRLR right there. You have to type them all in one at a time. Yeah, just show me how to do it and I'll do it sometime. So yeah, this was a nice 15-minute IPG at 10 a.m. $15-minute. Oh man, I'm getting kind of tired, guys. I don't know. I might not do a market recap today. That's not good though. I really should. I don't know. I don't want to force it. Yeah, 10 o'clock inversion for value at 15 minute. And then you can take the Jan entry as well, where basically you enter on a retrace. Now all of a sudden it's 3R because we waited for the Jan entry. $10.15. $10.15 inversion for value gap dash J. Go to search, add the first one. There's a plus sign on the right, then add them one by one. That's it. Just save it to your watch list. Okay. Okay. So alphabet. Then add them one by one. I don't know what to do now. Add them one by one. I don't know, dude. I want to do it, but yeah. Maybe just send me a video or something on how to do it. I don't know, guys. I'm getting kind of tired. Maybe I'll just take a break. Let's see. How many people are watching? If there's a lot of people watching, I'll keep going. If not, I might just be done. Where's my phone? Sweet. Thank you, Javier. Oh, there's 5 watching. Alright. You want me to keep going, guys? You want me to film the market recap today? Okay. Oh, man, there's so much to review. Like, we really did end up continuing all the way to fill the RTH gap. Yeah, Kirk, I really should make the market recap. I shouldn't be a little baby. I should make it. I mean, there's a lot to talk about today. I mean, there really is. There's so many different ways to trade this price action, and it was so obvious when you look at it in hindsight. Because we had a Judas swing from market open down. This stayed high resistance when we had the Judas swing, and then 10 a.m. Expanded. Sent the DM. Check it out. Alright, I'll check it out when I'm done streaming. That's sick, bro. That's sick. Wow, look at that Jan entry. You know what's crazy is the Jan entry is the same exact spot as that first strike entry. How crazy is that? It's pretty precise. All right. Man, I'm like I said, I'm getting kind of tired. I don't know what else to look at. I guess we had a 15-minute gap form with this placement, so we could have anticipated this 15-minute gap to hold, right? Oh, look at how beautifully that ended up holding. It's crazy because like I'm like, I could be done, and then we were like, actually, let's just keep going, and then we see something else. But we would anticipate this 15-minute gap to hold. Why? Why would we anticipate this 15-minute gap to hold? Because beautiful displacement. So you can think of this as a 15-minute 2022 model where we swept out the low. So liquidity sweep, displacement, breaker structure with displacement, and then there's that 15-minute gap. So we could look and see, okay, was there 1 minute change in state? There was. And then we continued. How cool is that? And then also, sniper model probably. Guys, are these markets ever going to stop following smart money concepts? No. They always will. But it's just a matter of having risk management, right? You're going to be wrong. But that's okay. Accept being wrong, and it's okay to be wrong. Wow, how cool is this? Sniper model. Sniper. Sniper. Now, realistically, I'd go for like 1 standard deviation, but it is kind of cool that you can see that we do, in fact, go up to the 4th. So there's that break. Here's the sweep. Oh, man. Into the fair value gap. Anytime, guys, anytime we have like kind of like a larger looking change in state like this, like you can kind of see that there's probably going to be, what's the word? You can see we're probably not going to react off the top of it. We're probably going to dig into it. Sniper model is going to be super nice. You can see sniper model right there. Yeah, I'll try and make the market recap, Kirk, because I think it's valuable, right? It's valuable. Especially for people in the future. Because then they can look back and say, oh, this is exactly what happened this day and how I could have traded it. Cool, you know? Yeah, 1 minute change in state. Clean. Every day, just get a little better. Isn't it crazy, like, how used to it we're getting to like how perfect these markets are? Like, me personally, like, I'm not surprised at all. Like, wow, we had perfect manipulation into the gap. We got change of state. We perfectly tapped the sniper entry. We perfectly tapped the change of state. Like, I'm not even surprised anymore. Like, it's not even surprising to me. I just know that that's how these markets move. But for someone who's just now watching my streams, they're probably like, yo, what the heck? We perfectly tapped that. We induced the low into the change of state here, and then we went up to the fourth, and I'm like, that's just normal. This is what normally happens. Yeah, let's just call this a sniper model. Clean as heck. We're probably below the true open as well. Do we look? What's the true open? 1022? Oh, 1022 is, wait. That's not the true open. 1052 is the true open. Oh, now we're cooking. Now we're cooking. Yo! You guys, oh my gosh. This was, how precise was this, bro? 1052. Do you guys see why I like true opens? Sniper model. Perfectly chilling below 1052. Coincidence? No, not a coincidence, dude. Not a coincidence. These markets are freaking precise as heck. Wow. That just makes me want to stand up and start clapping, bro. What? That's just holy crap. This is the type of stuff that I live for in these markets, bro. I see this kind of stuff happen, and I'm like, holy crap, dude. That is just insane. That is just chef's kiss, bro. Chef's kiss. Oh my gosh, 1119 is it's a 369 time. That's crazy. That's crazy. Yeah, so I'll make a market recap. I won't be a baby. I'll make it. Oh my gosh. But I think I'm going to end the stream here because I'm getting kind of tired. Oh, it was right at the start of the Hydra macro too. Crazy. Okay. So, what is this? 1119. Sniper model. I haven't recorded the sniper model in a while. I'm just gonna call it sniper. And then 15-minute aligning with the 1 minute. Let's go ahead and save that. Okay, guys. Hey, what up, Raj? I'm just ending the stream now. But, what up, bro? I'm gonna end the stream here, guys. Thank you guys so much for watching. See you guys. I'm gonna try and make the market recap. If I don't, that's disappointing, but I'll try. Hopefully I do it. Okay, peace out, everyone.